Good morning, guys. Welcome to the stream. Mark,
Yeah.
you got it here. Let me open that up for you. There you go.
Okay.
Guys, welcome to the stream. Hope you're having a wonderful day. I'm B2B. This is Professor Mark, and he is going to lead you through the market today. Good morning, Mark.
Hey, how's it going?
Wonderful.
So let me ask you a question, dude. So you lost a lot of weight just by going low carb?
Yeah, well, what I did was I shaved off. I went to 15 grams of carbs per meal, no matter what, and then the snacks as well. And then I counted the carbohydrates every day, no matter what. So everything that I eat, I watch the carbohydrates in, and that's what I did for the first like 6 months. And then now I can eat whatever I want because my metabolism is adjusted, and now it works.
So your goal was to stay below 45 grams of carbs a day?
60.
Below 60.
Yeah, so because you're supposed to snack too, you can't let yourself not eat. You have to give yourself enough. So what I would do was I would take some romaine lettuce and I would roll it up in a piece of meat with some cheese and eat about six of those. That's a snack. I would do that a couple of times a day, and you have to shrink your diet down to get just proteins and just what you want. Without the carbohydrates and without the complex sugars. And then once you do that, the weight starts to come off. It falls off within about 3 weeks. You'll start to see it really start to drop off. And once you do this and you get used to it, you don't even recognize needing them anymore. And the key, Mark, is um, to not sacrifice something that you want. So, like if you want a piece of cake, you cut a sliver of cake. You don't cut a wide hunk of cake. You take a small piece and you get the little sweet that you want and you walk away from it. And it just takes a little bit of self control, but you're good at this already, dude, with the mind control. So you should be able to do this with no problem.
Yeah. All right. Anyway, just thinking about it.
It works.
Yeah. So, all right. Well, real hot up here today. It's so hot they're actually closing the schools. Um,
If I can find the information that the nutritionalist gave me, I'll see if I can find it. And I'll scan it and send it to you, Mark.
yeah, I would appreciate that.
Yeah, no problem.
All right.
Good
So
morning,
let's see
guys.
what's going on here today. Um, well, GameStop is reporting. So this might be something to keep an eye on because it seems like whatever happens with GameStop is wrong. Like the initial reaction is wrong. So just kind of putting it out there. So if there's good news, or if there's stock, I should say, if there's news that drives the stock up a lot, it's a good chance it reverses and goes lower. And if there's news that makes the stock open way down, there's good news that it reverses and goes higher.
Right.
You can even see that here in the chart, right? So I don't recall what news was back here, but as we can see, GameStop got down to a level that had been support, and we know that there tends to be support at former support levels, and you could attribute this to seller's remorse. People sold down here, and market blasts off. They say, "Oh man, I made a mistake, but if it comes back, I'm going to buy it back." So anyway, we got this support down here and found support again. But I forget what news this was, but you can just tell by this particular day. The stock opened here. So it opened at 26.57, and by the end of the day, it closed at 23.84. So this was an overreaction in the wrong direction to whatever the news story was. And then here, I remember this actually because we talked about this. They had the news that their CEO was out, and I said, "Well, that's even though the stock opened down 20%." I said, "Well, that's good news when you get rid of a CEO that hasn't been performing." And then, sure enough, stock opens at 20.30, and 4 days later, it's trading around 27. So I'm not sure when they report, but I'm pretty sure it's this morning. So let's see here. And I saw something that was an article about short selling, and you know me, I'd like to
Hmm.
talk about how these companies are actually pretty sad that they blame their stock collapsing on short selling. I mean,
Yeah.
I don't know if there's ever, at least in the modern era, if there's ever been if there's ever been a stock that's really been driven lower by short sellers. In the old days, you people would form these pools, but all that stuff is illegal now. And here's the thing, right? If something is shorted, then you have a guaranteed buyer because all that stock needs to get bought back. So, like the guy from Mullen Automotive was like blaming, oh, it's the shorts. No, it's the fact that your company like loses tons of money is why your stock is down. You can't blame short sellers. Just like people who buy stocks are wrong a lot, people who short are wrong. So let's see here. You can never short a stock again. So this is an article on GameStop. Let's see. The episode GameStop reports results. Oh, so they report after the close. All right, so we'll have to look at this tomorrow morning. Brings to mind the huge surge in its price in January of 21. So Reddit message board. Let's see. I remember hearing a rumor during that week. Citadel was taking down, telling their books to cut in half. But England said he did not believe that. England was asked how he knew Citadel wasn't cutting its short bets. He said he didn't speak to anyone there. There is just an element, and you read this in entrepreneurs of all types, but there's an element of being disagreeable, Shorting securities was a core mandate of what Citadel did. It was a huge department. Well, I mean, Citadel is a broker. So you don't know. Citadel has a broker and it's a money manager. It's two different wings. So if their broker is selling it, it's probably on behalf of someone else. And in terms of like this whole short selling, then, I mean, in my 20 some odd years as a trader, it would have just been impossible to naked short something. Naked short is like where you sell something short without borrowing the shares. And I just don't see how it could be done because there's just too many. I mean, I don't see how it could be done, at least in any experience that I was ever in. You'd have to have multiple people willing to break the law. And if you send over a short sell to your broker, you have to tell them it's a short, right? You can't just tell them go sell. You have to tell them it's a short. And then they say, well, where did you get the borrow from? And if you can't answer them, then they're not going to take the order. All right. So anyway, so that's the story with that. Just something to keep an eye on here. I see our president is making us proud once again, walking out of the Medal of Honor ceremony before it was over. So,
are you serious?
Yeah, bro. Yeah, that's what it says. Lack of respect. Can't be surprised. At least he didn't. At least he didn't check. Check his watch. Maybe there was an episode of Matlock on or something.
It's
my
just
French, but whatever.
And it's not just it's the people behind him that are propping this thing up like this is a football game and we're on the 50-yard line and we're trying to decide who gets to go to the 45. They've got our country split. And if they sent Adam Schiff out yesterday, I saw on CNN or something saying that they needed to go ahead and invoke the 14th Amendment, and all it's going to take is one judge to say that Donald Trump can't run for office. There's 75 million people that voted for that man, even though we know that there's 87 million that thought Joey B was going to do a better job. And that's 75 million people that aren't going to take that, Mark.
Well, you know what? If they can do it, then the Republicans, some Republican judge somewhere could be like, guess what? I'm suing Joe Biden.
But the problem is that once we go down this hole, we're no longer a country. See, the rule of law is what makes us what we are. And when we quit following the rule of law, then we fall apart. And it's like a house divided will fall. And that's probably an old term from somebody. But the fact of the matter is either the country is either going to fall apart or it's going to lay stagnant and die, because we want to sit here and infight with each other. And it's dumb when we're all part of the same group and we all care for the same things, which is people.
Well, that's actually from the Bible. And then Abraham Lincoln used it. House divided cannot stand. All right, so we got a question here. How to look at the investor page of GameStop. I go to this site here, Well Wisdom. I think you could find it on Yahoo Finance too. But this is what's called the 13F, and these are all the holders, and they have to once a quarter they have to report their holdings and if they bought or sold. So let's see who is the biggest market value here. All right, RC Ventures. So that's the what's his face, Ryan Cohen. That's his I guess his firm. I guess his active investor. So yeah, so this is this active investor. So he owns the biggest position, 36 million shares. Next is Vanguard and BlackRock.
And they got out.
So, well, they've been selling, okay, but this shows their current position, and this shows what they did in the last quarter.
Oh, okay.
So this is really kind of inconsequential here. 24 million. They own 24 million shares, and they sold 130,000. So these guys are index funds: BlackRock, Vanguard, State Street. This is probably stuff that's coming in and out of the ETFs. So we don't really get to a real kind of buy and hold shop until we go down to here, say Geo Management, 3.7 million. But yeah, so this is what I use there, Sean Savage. So let's see. It shows source date. Yeah, you can see this is all at the end of last quarter. So this will get re-updated at the end of September. Let's see if we got any ones that are making meaningful. So I don't know why it says call and put here. See, this is where you got to be a little careful, because here they have calls and here they have puts. So a place like Susquehanna is so big that they probably have different strategies. Jane Street, this is a ETF firm, Northern Trust. So these are all kind of interesting. These are all like index funds here, except for this one and this one. Charles Schwab. So this is probably the combination of all their. Well, then again, Charles Schwab does have an investment management arm, so maybe this is what they own in their investment management arm. I don't know why it says calls and puts. I guess they. I mean, if it gives the amount of shares, I don't know why it says calls. Wolverine Trading, I know those guys. So these guys just took a new position here, okay? Because you see that they just in the last quarter they bought 1.012 million, and that's what their holdings are. So these guys are just added. Now the way this works is that if you're a broker and you get a really big order, and let's see this, let's see what GameStop does in a day. So this information is used by the brokers when they're trying to put together some kind of a block trade. So here we see this trades an average day. This trades about 3.2 million shares. So say someone calls up a broker and they get a really big order, and it's like, all right, listen, you got to buy me 1 million shares of this GameStop. What they're going to do is they're going to look at these firms that have been selling. Because if you put 1 million shares in some algorithm or just put it out in the market, you could really spook the market. So what they're going to do is they're going to go through here and be like, oh, well, these guys are a big seller. I mean, they only would leave 200,000 shares. Well, actually, shares held. Yeah. So these guys were a big seller. So let me call them. Because they want to be able to trade that 1 million shares without moving the price of the stock. So maybe Simplex Trading wants to sell another 500,000 shares. And then they might be careful about calling the buyers because you don't want the buyers to know there's another buyer lurking around. But this stuff is used in the institutional world actually pretty frequently.
So does your assistant go out and do all this stuff while you're on the phone working the order, Mark? Or is this something that you guys do while you're trying to place an order? So somebody calls in with an order, say for 1 million shares of Apple. How do you place that?
Well, I was on the buy side. So the buy side is the side of the market where you have to pay commissions. So it's like your pension plans, your mutual funds, your hedge funds. So in order to execute a trade, they need to call a broker. So if I called up and said, I mean, a 1 million shares of Apple would be a really easy trade, right? Because Apple trades so many shares a day. So that's something that they would just kind of put into some algorithm. And how would I decide who I was going to trade with? Well, to buy 1 million shares of Apple, that's a really, really easy trade because it probably trades 50 million shares a day. So that's something like, all right, well, let's see. Who has gotten us research recently? Who has taken some of the people here to like conferences to meet these companies, to meet the management? Oh, let's see. Our guys went to the UBS conference last week. And they got to see these companies. All right, well, here's an easy trade because it's basically just free commissions you're giving. So when you're a trader, you have to look at a trade and think two different things. One is, can I add value to this or can I not? And if it's buy 1 million shares of Apple, every broker is going to pretty much do the same job. But if it's something like this, all right, we got to buy 1 million shares of GameStop and it only trades 3 million shares a day. Let's see if we can find someone who's been a seller so we can call them up and say, hey, listen, you guys sold 540,000 shares. You're still long 640,000. If you're looking to this is how the call would go. They would call up D.E. Shaw and say, hey, listen, if you guys are still a seller of GameStop, I got a place I can show an offer. And then if the people over there are interested, then it's like the feel out game. Like, oh, well, how many shares are you looking to sell? Or, how many shares are you looking to sell? Can you give me some color? Blah, 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 blah. And big part of this type of trading is knowing when to bluff and when not to bluff. It's like sometimes you show your hand, sometimes you don't show your hand. If you're talking to someone on the other phone, or if you're talking to someone at a broker, if you're on the phone with a broker who you really trust, you might give them a little bit more information because you can trust them not to share it. If it's a broker you don't trust, you might not want to tell them anything. You might call them up and say, hey, listen, I see you guys have been the axe, because you can tell who's been trading these stocks. There's ways that firms can post it.
Okay.
So if you say, all right, BTIG has traded 80% of the volume over this last week, and I got something here big to do. I got a big buy order. Well, you could call them up and be like BTIG. Now, if it's someone you don't trust, it's like, well, listen, I got something going on over here. Let me know if you guys are doing anything. So you really want to be totally ambiguous. But if it's someone who you do trust, like I used to really trust my sales trader over there, Ricky, and I'd be like, dude, so listen, man, I got a big chunk of this to go. See if you can find me a bid. Now, he's going to kind of keep that under his hat because he's got his clients. The guy sitting next to him at BTIG might have different clients. So say the guy sitting next to him knows that one of his clients is active in GameStop and they would be interested in what we're doing, he could kind of tell them, right? So he calls up his client and be like, hey, you guys doing anything on GameStop? I'm hearing there's a large seller around. So that could really screw up my picture. If they were a seller, they could just knock the stock down ahead of me, or if they were a buyer, they could just back away. So there's so much competition in the brokers because these sales traders, they all fight over accounts. If they're in a firm where it's what we call like you eat what you kill, where people just get commissions.
Right.
Like if you're Goldman Sachs, you're getting a fat salary, so you don't really, it's not really an issue. But if you're at BTIG, you get paid on commission. So some of the guys there might be sleazebags, and some of the guys there might be really good and who I trust. So every day is different, and that's why I say that trading is not like chess, because in chess the rules are always the same. But in trading, what works today might not work tomorrow. It's all about the psychology that we got to deal with there.
So then basically you build yourself up a network of other traders on the sell side that you can actually call, and you realize that they'll do what you ask them to do, or they'll give you the best price.
Yeah, well, yeah. It's about finding people that you trust and that you get along with.
Gotcha.
Because there's a lot of egos, and in the sell side, it's like, all right, well, who is your allegiance to over there? Is it to me, your client, or is it to your market maker? And some of these guys have real big egos, and they go out drinking and fighting with the market makers. So maybe they put them ahead of the client, or maybe they have a different client who pays them a lot more commissions than you do. They're going to put their needs first. So it's every day is different, and it's like, yes, like you said, you have to build up a network of these different brokers, and different brokers have a specialty in different things. Like my guys over at Jones Trading, they were the best at finding really illiquid stocks. They just had the biggest network of accounts that they could call. So they were good at that. Then like Cowan had a really good healthcare trading team. So if I had healthcare stocks to trade, I would tend to call them because I know that they would do a good job. So different brokers have, like, not every broker is the same. Different brokers are in touch with different people. Like say Sandler O'Neill, which is now Sandler Piper, but it used to be Sandler O'Neill. They specialized in financial stocks, like bank stocks, insurance stocks. So if you wanted to buy Microsoft, I mean, I don't know, that's a good example because anyone could trade Microsoft because it's so liquid. But say you had some tech stock you wanted to buy. Well, you probably wouldn't call Sandler O'Neill because Sandler O'Neill doesn't really specialize in tech. I mean, they're going to take the order because they get commissions, but they would be a call. It's like, hey, I got this I want to buy a Southeast regional bank that's a micro cap. You got anywhere you can find me some sellers? And they would be in touch with, yeah, we talk to a lot of people that own these banks, or we talk to the bank itself. So, yeah, so we got some places we could call.
So each one of these little kind of like shops, I guess, would have their own little niche that they're in, and you're able to go by knowing those niches, you can go out and find those people and get the right information you need to be able to place the proper trade.
Yeah, in theory, yeah, that's what you do. Sometimes it doesn't
Well,
work
of
out
course,
like
that's
you.
same thing with anything,
Yeah,
but that's cool, man. Thanks for letting me know that. Interesting.
yeah. So that's part of the job. That's why that's why like people that's why it takes a long time to become a really good trader, because it takes a while to develop these relationships, to see who you trust, who you don't trust.
Yeah, I can see
Like, I'll
that.
give you an example. There's this guy that I used to have to trade with because he was friends with the guy who took over my firm and destroyed it. But real shallow, real arrogant. These two guys were like peas in a pod. So anyway, I go out with this guy to play golf, and you know how they say if you want to learn someone's personality, play around a golf with them.
That's all it takes.
So yeah, so anyway, so I went out there, and it was like literally the first time I had ever played. So we played 9 holes. He belongs to this really nice country club, really killer course. But it was the first time I ever played, so obviously I played terribly. I probably shot like 100 on 9 holes. So I went after that. That's right when I started playing. I started taking lessons. I started practicing a lot. So it was maybe at the end of the summer, I was like, all right, just kind of messing around with this guy. And it's like, hey, let's go play golf again. And I'll tell you what, let's make a bet. And here's the bet. We play 9 holes, no strokes, no nothing. Just whoever wins. If I beat you on 1 hole, then I win. So anyway, we go out there, and I had 2 pars where he bogeyed, and I had a bogey where he double bogeyed. And the dude was like seething, man. He was so mad, but he couldn't show it, but I could tell. And I just remember thinking, man, this guy's a douchebag. And it turns out that he was not a guy who I could trust. He would put his other clients before us. He would lie about stuff. They never did a good job. So yeah, it's just like in anything, right? You end up being gravitated toward the people that have similar personalities as you.
No,
So these guys were
yeah.
both
Listen,
these guys were both shallow, arrogant douchebags, and they were good friends.
there's a guy where I'm from that rigs every golf tournament. He's the president of the golf course, and every golf tournament he wins it because he's got it rigged up for himself. It's just a joke every time you go. It's fun. It's laughable, really. Everybody laughs at him, but he wins every time.
Well, it's pretty pathetic that you're a grown man and you're so insecure you have to cheat at golf.
Yeah, well, and it's like on a Thursday with everybody else, he's cheating too. Like, if you're out with just your friends hanging out, he's using the old foot wedge on the regular.
Yeah, that's why I would always, if I played with someone who I didn't trust, I would always like tell my caddy, hey, keep an eye on this guy's score.
That's right. Let's count those strokes and make sure this boy's telling the truth.
Yeah. Like there's some guy on my brother's golf course who's got a handicap of like 25, and supposedly he cheated and he won his trophy. And I'm like, dude, anyone who's a handicap of 25 should not have a golf trophy on their shelf.
That's it.
But hello, Double H. How are you? Hey, Maddie, Avy. All right. Anyway, let's go through these markets real quick here. So as we can see, we got up to around 452, and now we're reversing. So there was an article, a headline yesterday that's like market sells off on global weakness or global economic weakness. And I just don't think that's the case. I think that the market got up to a level that was support. So we know that there tends to be resistance at former support levels, because you have the people who bought here who are trying to get out at break even. And then some of these sellers notice that, the price isn't moving any higher, so I better reduce the price I'm willing to sell at. I was going to sell at 452, but there's someone out there who's willing to sell at 451.50, so I better go to 451. And then you get the snowball effect. And as you can see, it's continuing this morning. I mean, it's only down 23 basis points. But was yesterday's move like a technical move, or was it because of that headline, stocks go down on global weakness? And I would say it's a technical move. And I also would say that if I didn't see the news, I don't think my analysis of the markets would be that much different. So now we're trending lower. My guess is that we get down to around here, around 440, 350. And at that point, maybe you get a bounce. So that's about, maybe another 2% lower or 1.5% lower. So it's not like a huge move or a dramatic move, but I would say the path of least resistance now is down. And if we got down to here, I'd be looking for some kind of a bounce. All right, so now we're going to go look at the healthcare. The tech sector, which is the biggest. So it's usually the most, I would say it's could be the most important sector to look at most of the time, but not all the time. Sometimes you got to watch healthcare. Sometimes you got to watch the financials. But just because tech is such a big part, it's kind of important to keep an eye on regardless. But same kind of thing happened here. So we rallied and we hit an important level that was resistance, and then it converted into support. See that? So what was resistance here became support over here. And that's right where we hit resistance. So resistance turns into support because you have remorseful sellers trying to buy their shares back. Support turns into resistance because you have remorseful buyers trying to sell their shares at break even. So this has kind of put a top on here for now, and I'd be pretty surprised to see this move ahead. I think it's probably going to go lower. And then the second biggest sector is the healthcare sector. Oh, wow, look at that. That's a big move lower. So now here's where we can start thinking about some trades in the short side here, because if this support breaks, and a lot of times moves like this have follow through, but if this support breaks, looks like our next stop is probably down around here, which it might not seem like a lot. It's only 3 points, but for a sector, that's a big move. That would be about 2%. So then we could look within the sector for companies that look a little bit more tempting. And we know that United Healthcare was looking pretty weak. And I know a lot of our people got in on that one. Well, let's see where that is. This morning, let's see here. All right, so it's not really doing anything in the pre-market. But this is another thing that could be ready to break support. And then next stop could probably be down around here. And then Johnson & Johnson, I believe, is the second biggest company in there.
It's flat too.
Yeah, so this looks like it's got a little bit more. It's only 1.5 points, but in the options world, that's could be a pretty significant move. So what I'm looking at is this support from here. So let me true this up a little.
And it's in that gap too, Mark.
Yeah. All right, so this blue line here, 158. So this looks like it could give up another couple points. And we could go up here and we could look at the companies that are within this sector by looking at the fact sheet. Because when we look at the sector, what we're looking at is the ETF. And the ETF is a basket of stocks. So Eli Lilly, well, let's look at Lilly. We're just kind of waiting for a while on that reversal after the fat drug hype. But I don't know if it happened. Now you see it's still kind of trending higher.
A lot of fat people.
Which shows why it was like why we wait for the trigger. I mean, our trigger was if this line broke, if this support broke, and it never did. So we never would have gotten into the position here. We were thinking about that this was going to reverse because of all the hype around these drugs, like, I don't know. Well, there's so many of them now, the Zembic or whatever. But it didn't. But it didn't. So I was wrong. But I never would have gone into the trade because the trigger never occurred. It still might over the next week or so. But this is why you kind of why it makes sense to have a trigger. In other words, you have your setup, which is your get ready, get set. And that could be like something's oversold, it's at support. The go is what makes you actually get into the trade. And that could be the reversal starts or a certain level gets passed. And then if you could have a lot of trades that are set up and maybe only a couple of them get triggered.
How you doing today, GTI? JTI, sorry.
Merck. Let's see what Merck's doing.
Oh.
Yeah, so that had a big move lower.
Well, they're saying that they're going to make an actual vaccine that works this time. That's what Joe Biden said yesterday.
Yeah. Yeah, they're talking about these damn masks again. You gotta be kidding, man. If they were to make
I'm
us
not
wear
masking
masks.
up, Mark, and I'm not stopping anything. I'm just gonna, you know what? I'm not getting another shot. I'm not getting a shot.
Nah, why? Why would you?
I've had it before. I don't need it anymore. And if I die from it, you know what? I've lived a decent life. I've lived and laughed, and hell with it. I'll go home.
Oh man. I mean, I know the University of Oxford did this big study, and they said basically masks like were worthless.
Man, they're talking about now
So,
that if you didn't let the mask air out for 30 minutes, that there's carcinogens in the mask.
yeah, yeah. I mean, getting sick is part of being a person. I mean, it's got to build
Build your immunity. God,
your immune
yeah.
system gets stronger. All right, so healthcare is looking pretty weak. So think about this now. So we looked at tech, and so tech is, I think, about 28% of the market, and tech is right at resistance. What happens sometimes when things get to resistance? Well, they tend to sell off because you get the people that want to sell and they notice the price isn't moving higher anymore. So they just say, well, gee, markets move higher because there's not enough sellers. If all of a sudden the market is not moving higher anymore, then there must be sellers. So there must be new sellers entering the market. So you get these investors who want to sell, or I guess traders is probably more apt to say, that want to sell and they start undercutting each other. So you get the snowball effect. All right. So there's a good chance that the tech sector starts to trend lower because it might be failing at resistance. Then if we look at the second biggest sector, this looks technically kind of weak as well because this could be breaking support. So you could have the biggest sector in the market reversing off of resistance and heading lower. And you could have the healthcare sector, which is the second biggest sector, breaking support and heading lower as well. So these are the type of things we look at. If tech starts to head lower and this support here breaks, that's going to bring the whole market lower. So the market is the sum of its parts. And by looking at these parts here, we can get insight into what's going to happen in the broader market. Let's see. So financials had a pretty nasty reversal at this resistance. And once again, what do we see? We have a market or an ETF that ran into resistance around a level that was support. So support turns into resistance because of buyer's remorse. There's people who bought here who want to get out over here. And it's like, oh man. So we had this big sell-off, right? Sellers undercutting each other. And this morning we're looking down in the pre-market a little bit. So after a big move lower like that, you're not getting any kind of a bounce back. So that looks pretty weak as well. Let's look at consumer discretionary. And what is this doing? Pre-market, no trades. Well, didn't really do much yesterday. So this looks kind of neutral here. But if it starts to head lower, we got to look at this 168. I mean, I know it doesn't sound like much, but for the sectors, that would be a pretty big move there. All right. And now let's see if oil is still moving higher. Oops. All right. So oil is holding up after making a big move higher over the last, gosh, look at that, the last week.
Mm-hmm.
So this is your classic sign of inflation. And I guess, I mean, who the hell knows why it's going up? I mean, production cuts by Saudi Arabia and Russia. I mean, they want oil to be high because that's how their countries run their economies.
Yep.
I think that's kind of so it's kind of ridiculous to go over to Saudi Arabia and be like, "Oh, you guys need to pump more oil to bring the prices down." It's like, can you imagine when Biden left that meeting and as soon as that door closed, they were all probably laughing.
Mark, they were laughing at him when he decided to stumble up the plane to go over there. They were laughing all the way while he was flying over to the place because he was going to go over there and handle whatever they call him, I guess, SMJ or whatever his name is, Solomon Mohammed, or I don't know the gentleman's name. But anyway, he was going to go over there and make him the pariah that he was. And he goes over there and fist bumps the cat.
Yeah, it's It's just inexplicable. It's like, oh, gee, let's shut down North American oil production. Oh, we need more oil. Oh, it made prices go up. How about that? Who would have thought? Oh, let's go ask Saudi Arabia to sell us oil. Let's go ask Saudi Arabia to try to knock the price down, even though they make their money by having a high oil price. It's just
Think about
it
that.
just leaves you scratching your head.
If you're after that, the evil empires of the world, they're producing oil. So if they're making their money off of the fact that we don't produce oil and we've got to go buy it from them, why are we not producing our own so that we can squeeze the price down to $20 a barrel?
I don't know. I guess it's because of the green agenda.
The green agenda, the military industrial complex.
Dude, these people are stupid. And I saw this what's her face, Ocasio-Cortez. I mean, she could be like the dumbest person ever elected to Congress, and that's saying a lot.
Mm-hmm.
So I was watching where she posted this thing where they have someone speaking saying, "Oh, the corporations caused inflation because they decide where to put the prices," and it's like, boy, that is like Karl Marx. Like Karl Marx. I mean, the market sets the prices. The corporations don't come out and be like, "Oh, let's make oil go up by 130%." All right, so look at this here. Oh, all right. Anyway, this is important to watch too, everybody. This is our 10-year rate. So it's at 425. Once this thing starts getting above 430, up to maybe 440, that's when people really start to notice it. I guess you could say 430 is like a psychological level. But you can see over the last 2 days, this has really kind of spiked up. So higher interest rates are bad for the market. So interest rates moving up, oil kind of moving up. Those are each bad for the market, at least for other parts of the market. It's good for the energy sector. Healthcare could be breaking support. Tech could be rolling over. So the market looks technically pretty weak right now, if you ask me.
Yeah, you didn't make it sound too good there, Mark. Sounded pretty weak.
Yeah, I mean, I don't think the market's going to crash or anything like that, but it does look like it's going to trend lower. And again, it's because of these technicals. I mean, this is what markets do. They get to these important price levels and then they reverse or they
break out.
Or they break out. It's very rare that a market gets to an important price level and just hangs out. They look like we get to the resistance, we sell off. You don't see them like get to these levels and then just kind of trade sideways for an extended period of time. Even this here is a little bit unusual.
You know what? The IWM did it last year for about 10 months. The IWM was in like a $1 or $2 range, and then it broke.
This is the
it was last year sometime. It was in a range, and then it just fell apart. But looks a lot choppier.
So we got
when I was watching it.
We got some stuff going on here too, right? Resistance here became support over here, and I mean we haven't looked at this in a while, and I could tell because there's a question mark there. But so we got down to about 182, and then up here we could see resistance. And you got to understand, this is an ETF of 2,000 stocks, and yet somehow all these forces come together and produce these perfectly or almost perfectly precise levels. Here's our descending triangle pattern. So this shows us that we got our buyers who are complacent and are willing to hang out down around here. But as time is going by, the sellers are getting more aggressive. And you could tell because we have lower highs. Yeah, lower highs. So this high is lower than that, and this high is lower than that. So we got aggressive. This pattern illustrates aggressive sellers and complacent buyers.
Mark, you got a question from Orlando here.
Do I follow skew and move? No, but that doesn't mean we can't look at them.
Yeah, man, we'll trade anything.
What is skew? Did I write that? SKEW? That's not coming up as. Oh, the SIBO skew index. Is this what we're asking about? I don't really even know what this is. But I think you might be giving me the wrong symbol. So let me look at move. MOVE. So Movano. So what are these guys? So this is like a real penny stock, very illiquid. Um, I mean, here, like this completely makes sense here. You see this a lot on penny stocks. See how the $1 level is important. That's because what do people say? Oh, if it gets to $1, I'll buy it.
Mm-hmm.
People like nice round levels. So I'm going to put this right at $1. And we can see, I mean, it got a few cents below it, but not surprisingly, we found support at $1. And now where would the top of this be here? Right precisely at $1.50. Right? These are psychological levels. Sometimes the penny stocks, they don't really they kind of operate by their own set of rules. Because people just think differently when it comes to penny stocks. They don't mind paying up. See, look at that resistance there. Like if someone comes to you and says, "Hey, I got this penny stock. It's $1," and then by the time you get to put your order in, it's $1.20. It's like, yeah, all right, whatever. I'll still put it in. It's $1.20. But say it was a $10 stock and now it's at $12. People are a little bit more reluctant to do it. So the rules on these penny stocks are a little bit different. And you got to be careful because you got to understand, right? Something's a penny stock for a reason. It's a penny stock because the company is probably losing a lot of money. But I know people like to trade them because there's the potential of big returns. But we can see here the same principles that we see on our other charts. We got our fast move up and our fast move down. We get to support and we rally. So these are people that are like, oh man, I wanted to buy it at 1 and now it's at 105. I'm going to go to 110. They kind of just chase it along. And it's like, all right. Finally, they were like, oh man, just go buy it at any price. And we could see that here a lot of times when you see really aggressive buying, you get these gaps. And you tend to get aggressive buying at the beginning of a trend and at the end of a trend. So this quote unquote the smart money getting in. And then here is the people that have just been watching it move higher and higher and higher finally say, I'm sick of this. I'm just going to go buy it regardless of the price. And then you get this gap at the end of the trend. So this is what we call the exhaustion gap. And this is what we call the breakaway gap. So just something to kind of keep an eye on there. And look at that. There's our fast move. Move bond volatility index. No, that's not something that I follow. Let's see. Index. Bond market option volatility estimate index. No, it does look pretty cool though. Bond market volatility. So I would imagine that this is like the VIX of bonds. It's it's in volatility estimate, right? And that's what the VIX should be called because it's called the volatility index, but it's really not. Volatility is a number that goes backwards that you know exactly what it is. What the VIX does is a prediction of where the market thinks the volatility is going to be in the future. So I would say this would be the VIX of bonds. Now let's just take a look here. So this is March 23rd. So if I'm right, bonds would be selling off in March. Let's see if I'm right. Yeah, okay. Yeah, so that's here. So that's the so I don't really watch the VIX index because if you look at the market every day, you don't really need to because if things are getting really volatile or if things aren't getting volatile. But I know people use it as part of a model or people like to trade the VIX. But in terms of analysis, it's really something that trades coincidentally with the market. So it's really kind of, in my opinion, of no predictive value. I mean, maybe if you're someone who only looks at the market once a week, it's a good thing to look at that, give you some kind of guidance. But like Laszlo Barini was a great technician. I think he's probably still around. And he said, watching the VIX to predict where the market's going is like standing at the finish line of a horse race and seeing who comes across first to see who wins. Something along those lines. But anyway, might I digress? But no, I don't. I don't watch that. But we do keep an eye on bonds, though. This is the bond ETF, the total bond fund, and not surprisingly, looks like it's heading lower because interest rates are heading higher. And actually, if you look at the TNX index, TNX, this is the 10-year. this is the yield, right? So this is inverse of the bond price. If you invert this, well, here's the bonds. And guess what? If bonds break support, we could get a quick move lower, which would mean a quick move higher in interest rates. And that's something else that would be bearish for the market. So let me take that off before I confuse myself. Hey, Bernie. Now let's see what skew is. That's something I don't watch either, but I just want to see what it is. Skew, SIBO skew index. And this would probably do better with a line chart. And yeah, I mean, I'm not familiar with this. I mean, I could take a look at it later on, but it's not something I usually follow. All right, let's see, everybody, what else going on before I get going here.
So, like with a line chart, you can use your technicals the same exact way. It just doesn't give you the same precise levels, or does it give you precise levels as well?
Well, the trouble with the line chart, right? So what we were just looking at is an index.
Mm-hmm.
So it's not really trading. We're just looking at an index.
Sure.
But if you look at a line chart here, this is Apple. It doesn't show you the gaps, and it doesn't show you the intraday action. So we have this line chart here. Oh, look at that. We refilled our gap pretty precisely. Now, like, look at this. So on the line chart, you wouldn't even know that there's a gap there because it's just recording like the closing price to the next day's closing price. If you go to the candles chart, all of a sudden, oh, look at that. There's the gap. How about that? Right? So you don't see it on the line chart.
Right.
But you do see it on the candle chart. And you could see it on the bar chart too. But I don't know. I just like candlestick charts. I mean, I'm so used to them.
Yeah, no, I understand.
You do get more information because if you look here, you can tell, all right, well, we opened there and we closed there. We opened there and we closed there. Oh, then we had a gap. So you get a lot more information from this than some of these other things. I don't even know what some of these other things are. Hollow candles, Heiken Ashi. So, yeah, I mean, I don't know what this is. Again, you can't see for whatever reason, it doesn't show the gaps. And area, high-low area. That might be kind of interesting. High-low close. So middle line, I guess, is the close. The red line is the low, and the top line is the high. I mean, so that's kind of interesting, but you could see that in the candle charts because you can see the high is the top of the wick.
Mm-hmm.
The low is the bottom of the wick. So, yeah, so it looks like I would say that this gap refilled, right? That our gap and our fast move lower. And I mean, we've seen this play out because we've been watching this over the last week. Gap lower, fast move lower. Not a lot of people in here who are going to try to sell on the way back up who want to get out. So when the buyers come in, there's just not going to be a lot of people that they can buy from. So the sellers are going to be able to kind of jack up their prices. All right. If anyone has any, if no one else has any questions, when placing horizontal lines, do you only use the closing price? Most of the time, it's the close. I mean, sometimes you'll see like if there's a bunch of highs or lows that occurred at the same place, you know, maybe you keep an eye on that or this former high here. But probably 90% of the time, I place my trend lines my support and resistance lines on an open or a close because that's where most of the trading happens. But if you want to get like really precise, and probably too precise for our own good here, but if you look there, like the low trade on this day was around 170, the low trade on this day was around there, the high trade here, the high trade here, the high trade here. So this is an example where I might put the line against the highs and the lows, but in general, it's the opening or the close because that's where most of the volume trades. is on the opening and on the closing.
Hey, here's a good question from Orlando, Mark.
Well, it all depends on your time horizon. We're looking at this stuff here, and this is a time horizon where we're looking at days. So for here, if I'm putting some lines, I'm generally going to put them on the open and the close. And if you're a short-term trader, if you look at the one-day chart, there's going to be levels that within the day that are important that don't show up on the, say, the year-to-date chart. So, like, look at this level here, for example. So this is Apple from yesterday. Right? So intraday, this is an important chart. Or, sorry, an important price level. And it probably will be if we get back down there. But if you're looking at this on a longer-term basis, then that particular level isn't really that important. So it depends on your time horizon. All right, everyone, I'm going to get going, but I guess I will see you all tomorrow morning. And I hope you all have a good day.
Guys, have a wonderful day. Thank you so much for joining us. And if you don't mind, we are terrible at it, but please like and subscribe to the stream, share it with your friends, and tell everybody that you know.